It's red across the Dalal Street as it falls for the second straight week. The Nifty and the sensex have seen cuts of over 3% in the last 2 weeks. IT stocks were the biggest laggards after they fell nearly 6% this week, its biggest weekly fall in nearly a year. On this week's edition of Editors Roundtable, we decode the week gone by on Dalal Street. We put the spotlight on India's jewelry sector. We tell you how IT companies fared and performed and what Trump swearing in means for tariffs. I'm Reema. With me are my editors Prashant, Nimesh and Nigel. And joining us here in the newsroom is Rahul Arora of Nirmal Bang Equities. Hi, good to be back.
Yes, thank you for having me.
So, I mean, calmer week, right?
Calmer.
I think last
Ready
week...
for the action next week.
Ready for the action. Actually, last week was same time. I was just looking at data. Markets were crashing and burning. The previous week, 2% cuts on the Nifty, mid-cap and small-cap indices were around 7%. This week has been very, very small. I mean, ranged, and I guess waiting for Mr. Trump.
Well, that's right. And in cricketing parlance, you'd say that it was a 5-day test. It started off with the batting team getting absolutely badgered, but came back. Towards day 5, you said at least we survived, all of the 5 days, because going by Monday, Tuesday's action, you were getting very, very worried that it's going to be a rather tough week and maybe tough times ahead. But at least for this week, we, played out the innings, so to call it.
Actually, the Nifty is not giving the right picture. There was a lot of pullback in the broader market stocks. A lot of mid-cap names, small-cap names actually did very well. And then I was just looking at, because we put out so many brokerage notes, guess what? This week, in last 5 days, I've at least come across 15 to 17 IC reports on mid-cap names. So, looks like after the correction that we saw, a bit of interest is back, the sell-side interest is back, and even there is a bit of interest back from the larger institutions as well to look at this kind of mid and small cap names, which have actually corrected very sharply.
That is interesting, Nimesh. But are these all completely fresh names to sell side
ICs,
or
initiating reports?
But these are stocks on which somebody is initiating. Others have already have coverage.
There are few which have not been widely covered, but yeah, there are a few which are known names as well, like Hyundai. A lot of FI brokerages are covering. In fact, today was a lock-in getting end for Hyundai. So I guess some bit of supply would get absorbed in the days to come. But a lot of mid-cap names I saw wherein there was a lot of interest from especially smaller brokers to go out and initiate coverage on
and
those
some
names.
Serious damage also, right? Kalyan, for example, I was just looking at the price 10 days now from the highs of 800 to 500 today.
Yeah.
So that's 37-40% gone. So very, very sharp.
What about Rahul? How are you feeling about the markets? And thanks a lot for joining in, Rahul, first of all. And how are you feeling about the markets? I mean, if you were to give us a level in terms of the Nifty and the outlook for the remainder of the year, what do you be tilting towards? The large cap names instead of the mid caps?
I've been waiting for you to sort of come to me because when you mentioned cricket, it was almost like वो दुखती रथ पे हाथ रख दिया. That was one analogy you shouldn't have given because it brings back horrid memories of the last
few months.
The
boys will bounce back.
Yeah,
the girls are doing well.
Sorry, the girls are doing well.
Phenomenally well, yeah.
The 435 was good. But I think it's very difficult to take a directional call right now. I think you mentioned Trump a little earlier. You've just about started an earnings season. You have a union budget in a few days, and then followed 1 week post that with the first credit policy under the new RBI governor. So I think to take a directional call at this time could be a bit suicidal, to be very honest, because we don't know how all these are going to pan out. I don't know whether the impact of Trump is going to be so immediate and sudden as people are making it out to be. I mean, of course, he is very pro-tariffs, and we saw that in his first term. But I think that will probably play itself out with time. But I think the bigger, cue for us, if the last quarter's results were anything to go by, would be earnings. I think will still eventually dominate this market because, I was just talking to our economist. She doesn't expect too much to happen in this budget. I think, you still look at about 4.5% fiscal deficit for next year. I think at best you'll get one rate cut this fiscal year. So I think there is nothing that's going to move the market in a material way. And given the way the economy is shaped up, I don't think the government has too much room to tinker on the income tax front as people are expecting. So I think it's going to be an earnings-centric quarter. And of course, I think as the quarter wears on, you'll probably see more, from Trump. But I think for the next 15-20 days, taking a directional call will be very tough. I think it's going to be a very challenging year. I think it's going to be a very volatile year. You're probably going to be at 22,000 on the lower end and 26, 27 on the upper end. It's probably going to be the range, but it's going to be very violent, I think, in that range. So it's about a 4,000-5,000 broad, point range on the Nifty. But as Nimesh was talking, I think there's going to be enough opportunities that come out. I think you just have to wait and see what time you believe your stocks are right. Because, as somebody, as a late investor once told me, there'll always be stocks expensive at the lowest point of the market, and there'll be stocks cheap at the highest point of the market. You just have to know where to look for those ideas.
You guys were talking about cricket and boys are doing poorly and girls are doing well. I thought you were talking about my kids. I got a boy and a girl. Boys will bounce back. Girls are doing well. But I think that's a story we all know, right? Girls always do well. So.
That's how Azhar used to talk. I think. His post-match press con. The boys.
I can do that for you post the show. Yeah.
But you know, talking about
Rahul spoke about earnings, right? That's going to be a big theme. Was Q2 a blip, or do you think there is a structural slowdown? What is your take on Q3 and Q4?
So I think, Nimesh bhai, the one thing that is clearly a demarcated difference between Q2 and Q3 is I think a lot of the reactions that you have seen in Q3 are basis guidance and commentary. I think Q2 was on actuals. I think if you went on actuals, you would see very different reactions to stock prices even in this quarter's earnings. But I think consumption is in a massive slowdown. I think there is no question about that as far as staples are concerned. If you looked at the commentary that came out from LTI Mindtree, HCL Tech, I mean, if you exclude TCS, for example, the commentary hasn't been all that great. I think even for Infi, the ask rate is a negative number for the fourth quarter, if anything, you know, at that point. I think if there was any extra move to come on Reliance, it would have come and gone today. So I think when you look at the Nifty per se, I think 75% is BFSI, IT, consumer and Reliance, right? I think Axis Bank was not the best start for the banking sector. And I think even in our own coverage universe, if you look at public-private together, I think we're expecting about a 6 to 9% kind of growth on the NIs and the sort of profit before provisioning, the PPOP number that you talk about. NIMs are under pressure. So if 75% of the market, I mean, if you exclude Reliance, because like I said, if it had to do anything more, it would have done it today, and it's predominantly been driven by retail. But I think consumer, IT and banks have question marks. And in that backdrop, to take a very aggressive call on results. I think, Nimesh bhai, the one thing that I'm clear about after seeing Q2 and just the start of Q3's earnings, we're still in an earnings downgrade cycle. So let's not move away from that. I think at the end of this result season as well, you'll probably see more stocks getting downgraded than upgraded. So in that call, to take a very sort of, you know, structurally bullish call on the market seems a bit difficult.
In fact, let's talk about IT and then come in a little more detail. So what we've seen so far since the beginning of the earnings season, that's including TCS's numbers, and TCS reacted positively, and then you had violent downward moves in HCL Tech and Infosys. The Nifty IT index has slipped nearly 2.5% since the earnings began. Now, Q3 numbers were largely in line with expectations. There was a little bit of a pickup in growth. So if you pull up the year-on-year growth rates for the mid-cap, for the large-cap IT companies, we're looking at a mid-single-digit kind of a revenue growth. Infi at 6, TCS at 4.5, HCL Tech at 4.1%. But this is better than Q3 of last year. So there is a recovery taking place. But the question that even Rahul was talking about is that these are companies which are seeing a mid to high single-digit revenue growth. You know, pull up the FY26 and FY27 forecast for Infi, HCL Tech and TCS, the numbers which are out. And on an average, analysts are expecting about an 8 to 9% revenue growth for these companies in FY26 and FY27. So therefore, if the expectation is for a high single-digit kind of revenue growth, what is the valuation you should ascribe to them? Because right now, even after the little bit of a correction, valuations are still higher than the 5-year average valuation multiple. So TCS is, you know, now closer to 28 times. The last 5-year average would be 27 times. Infi is at 25, 26 times. The last 5-year average would be 24 times. So should you be paying higher multiples for a sector which is, you know, seeing a high single-digit kind of a revenue growth? That said, as we pointed out, there is a recovery. There is a slow and steady recovery taking place. Companies like TCS, LTI Mindtree are calling out FY26 to be a better year. HCL Tech acknowledged discretionary spending is better than what it was 3 months ago. And BFSI vertical is bouncing back. You know, in the case of LTI Mindtree or even TCS, if you pull up the numbers across the board, for the last 4 or 5 quarters, you are seeing a steady pickup in BFSI, and that is a powerful tap. But for now, at least, Rahul, on IT, there are no EPS upgrades, nor are there downgrades on an average so far. What's the investor positioning? Because they did well over the last 2 years.
So I think, Rima, for both IT as well as consumer, I don't see sustained visibility of double-digit top-line growth. Now, the only question is what valuations do you want to play? Because consumer companies grow at 1.5 to 2 times the valuations of IT companies. So IT, large-cap IT will broadly be between 25 to about 28, 29. Consumer will probably be anywhere between 40 to 50, 55, right? So I think the question is, and it comes back to the point of, you know, are you paying for growth or are you just paying for something because it's relatively cheap, right? And if you're paying for growth, then these are not going to be very exciting. So you either give a very large margin expansion, right? And for that, I think the rupee will have to play a very big role because I think a couple of the IT companies, as you pointed out, have actually spoken about client ramp downs happening in some cases, some one-off, some pass-throughs that have happened from FY24 into FY25. So the barring TCS, which has about a $10.2 billion, TCB, which is about 1.4 times to bill. That kind of confidence is not coming elsewhere. And a little bit of the movement that you have seen could also be positioning, where people have actually moved into TCS after these results from some of these stocks. So it could actually be a technical move within the sector that you have seen. But I think the cream here, and it goes back to the point that Nimesh was making a little earlier on large cap versus mid caps. I still think the Coforges and the Persistence of the world will still continue to give you those growths of 20-25%. And that's probably where money will continue to sort of, chase. And that's why for some years now you've seen the disparity in valuations between large cap IT and mid cap, but that comes back to the point, and if I reference it to consumer, it's consumer discretionary versus consumer staples. It's the exact same thing playing out, where you have companies that are growing, like going at 50, 55, 60 times. Let's take a look at United Spirits pre this report that came out of the US that was linking drinking to cancer, and then the change in CEO. It was at 1,700 rupees. It wasn't a cheap stock. It was a great stock. But then again, if you compare it to staples, there is a 25-30% valuation gap. So I think it's best to probably stay with TCS basis all that we have seen. And if you were to take a call on mid caps, I think probably Persistent and Coforge, LTI, Mindtree could sort of be places to hide. But apart from that, I wouldn't venture into being a sort of, on basis what we've heard, it wouldn't be like a 200-300 basis point overweight sector for me for sure at this point.
Usually the IT names are like 10% trading moves, right? Through the quarter. I mean, it's been that way for the last 2 years. I mean, the results day and maybe something slow through the rest of the quarter. But I mean, generally just a trading kind of thing. The other thing is with what's happening in the US next week and BFSI being, I think all the bank earnings have come and they've all been pretty good. And I don't know, I mean, at least they could trade up on sentiment if, there are measures announced which really juice up the US economy. And that could be one sector people latch on to, you think?
No, for sure. I think, see, Prashant, the TCV has to get converted to revenue. That's the only thing.
So on sentiment, I mean...
Yeah, so I think on sentiment, we could even argue on rupee, right?
Correct.
Effectively, because I was just speaking to my economist and I was asking her, what can the rupee potentially go to next year? She said 88, 89. So, I mean, on sentiment, yes, but then it comes back to the point that you made about trading. Now, see, the other thing, Prashant, is these are all, Reema can correct me if I'm wrong, but I think these are all like around 35% kind of ROE, ROC companies. So they're not like... consumer companies that are giving you 75, 80 or even 100%. Lever was at 100% before it made the acquisition and adjusted for goodwill came down. But I think that is also the play that you have. This is such a large differential. I mean, both are very cash-rich sectors. Yeah. Both, they will go in for, from time to time, they'll go in for buybacks or they'll, give you extra dividend and so on and so forth. But the core question is, as a shareholder, you want to go in and buy a piece of the business. Is that really growing? If you're just playing it for the ancillaries, it will continue to be just a trade. I mean, optically, lever at 2,300 or 2,400 is a great stock to buy. It was at 3,000. But do I necessarily need to buy it? Yeah. On the hope of a rain coming, or on the hope of rural, or on the hope of Manrega. So these are all, I think, that there is peripheral noise. But I think if you actually get into a situation where, say, a TCS or an Infi or a lever or some of the other consumer staple companies come and say, okay, we're growing at 12-13%. You'd be surprised these stocks could potentially even double from here. I don't think valuations, especially in IT, are that demanding.
Actually, IT and AI, etc. I don't know if you saw Goldman CEO essentially saying that 90%, and this ties in with your investment banking also, is that 90% of a company's prospectus when they come to the IPO can be done now with AI. I mean, that's the Goldman CEO. So I mean, we're talking about very large disruption coming.
We started using it in our research reports. We send out an AI-generated report every morning of, for people who don't want to go through those volumes of paper. Right. We actually send out an AI-generated report every morning.
And IT companies are also passing on the benefit. So at least in the case of LTI Mindtree, what they said is the generative AI-related productivity benefits were passed on to their top client. And that is something that hurt them. So they've done it only for their top client right now because it's an important one. don't want to lose it. But who knows, right? What if all those productivity benefits are passed on and the companies don't get to retain them?
And some haven't hiked wages. That's the other thing. Some haven't even taken the wage increases. So
well, Rahul, since you spoke about companies that will grow in double digits or mid-teens, I'll tell you what, we'll focus on a couple of those stocks. We'll slip into a short break. You come back, we'll focus on the jewelry theme. And Prashant as well will be telling us some more with regard to what are the expectations from President Trump, who takes office next week itself. Stay tuned.